All right, all right. Hi, Devin.
Hey Randy, how you doing?
I am doing great. Thank you so much for joining me today to do an exercise on how someone can buy a fixer, rehab it themselves with a rehab loan, and then live in it. Because usually it's an investor that buys these quote unquote ugly homes.
Oh, 100%.
And what I really want to do is I'll go back and share with you about this deal that I got. It was from a referral partner sending me a son who needed to sell mom's house. And the house definitely needed work, but he didn't want to put any money into the house because, resources or whatever. But what he wanted to do was just sell the house. But what we knew that we wanted to do was put it on the market instead of selling it to an investor, which we could have done, and we probably would have left money on the table. So we went on market and sold it as is. He cleared out the whole house, took out all of the belongings. It was an empty house, but the house needed a little bit of work.
Hmm.
It was actually, I would say, a really great opportunity, because it was a cosmetic flip. The foundation was great. The roof was relatively new. The water heater was relatively new, and the furnace was relatively new. So
Perfect.
those big ticket items were pretty much taken care of. And I would say electrical might have been an issue, but it has been working. So even then, when I ran through the numbers with my husband, who, we've been general contractors for a little while, and he's very versed in this. I am too, but I was able to work with him to kind of like do the numbers together. So what I
Yep.
want to show you is the property first. And so then we put it on the market. It sold for over list price, closed in 7 days, and it
Jeez.
was an investor.
Okay.
And what for me, I thought it would have been a great opportunity for somebody who was a first-time home buyer who couldn't get into the Seattle market because it was in White Center, who couldn't get into the Seattle market because of prices, that they might have been able to buy this house, fix it themselves, keep the equity, and that would have been like the ideal situation for me. And I mean, we closed in 7 days, which was also great too.
Right.
But I wanted to really invite you in here to see, okay, what could it have looked like for somebody who wanted to buy it? Okay, let me share my screen with you. Okay, I have so many different windows up.
And while you're pulling that up, I'll add I love that we're taking time to talk about this topic. It's something I've been incredibly passionate about for several years now. It's a great program. Renovation loans have just been around forever and are just so underutilized in this market. Oftentimes, maybe lenders who are offering them are uneducated on how to put the loans together, or maybe they just don't have the right back end support. And we've just had a phenomenal team behind us that have been able to help do this. And it just offers just a fantastic program that really, like, once you go over the details of how it works and potentially how little capital someone might need to actually acquire a property and renovate a property, it's just remarkable the opportunity that's there. And I've made it a huge point over the years to just try and raise awareness to this program to both agents and borrowers alike, and just really try and set the air clean. There's a lot of bad information out there about renovation loans being this horrible process and all that stuff. And this is not true. And they're just such fantastic programs.
Yeah, and I mean, even the process in itself, everything is a process. Not having a home and having your landlord raise your rent is a process.
Right.
So what process are you going to choose? Yeah, it might be a little more challenging. However, you put in the work and that's why you get the gain, right? And
Yep.
this why investors get the gain is because putting their money into it and the work and time into it and the risk, and then they get the gain where, everyday buyers can do that too.
100%.
Okay, perfect. Let me share screen. Let me show you the house because I mean, I think it's such a great opportunity. So here it is. 2 days on the market. I got an offer 2 hours into being on the market. We listed it at 399. And we ended up getting 415. We could have gotten more, but my client was just happy with what he was like. If we got more than four, I'd be happy. And so here we are. And we closed in 7 days. So let's just walk through the house with you real quick.
Yeah.
The pictures. like I said, like newer roof, siding's fine, windows are actually relatively new as well, so we didn't
Yeah.
do anything with windows. Um, you could refinish these floors, but I priced it to put in new LVP. Um, and then kitchen, super cute, not big to where it's gonna be cost a ton of money to finish.
Yeah. It's actually got good size in there too.
Yeah, 890 square feet with an additional attic, which I'll show you. So you'll see those stairs. It goes up into the attic that's partially finished. So this house was in their family for over 50 plus years. And
Right.
it's a mom and my client grew up in this attic right here. Was his room,
Okay.
right? So, and then of course, mom ended up living by herself, so it aged, and she didn't have the capacity to take care of the house herself, but still relatively good condition. Um, the roof was replaced. This is a shed. Let me share. And then there's a massive garage out there as well, right here.
Yeah, like you said, bones wise, very very clean as far as that part goes.
Yeah. I mean, when I was thinking like, so the house go back to the specs. The house sold for 415. The
Hmm.
ARV on the house is actually 575. And so,
Wow.
yeah, so ARV is 575. The investor bought it for 415. He'll probably put less than 60K into this and then
Right.
probably sell it for 575.
So on that, is that, and that's not expanding the footprint. That's not doing anything other than just putting finishing touches on what's already there. No blowout of walls and or doing anything crazy, right?
Nope.
Yeah, no, that's perfect. That's a great example of exactly what we're talking about.
Right. The 890 is not even the attic. It's not including the attic. So they could extend that and then add square footage as well, which they'll
Right.
do. I'm sure they'll do. Uh,
Hmm.
so let me just share with you. Okay, so after how about I share with you the numbers first, and then you tell us what the process would be like for somebody who wanted to take on something like this.
Yeah. What was the lot size on this too?
The lot size is 6,250. So it's
Yeah,
actually,
it's
it
good
could,
size.
yeah, you could put a dadu in the back,
I was
right?
just gonna say that. You stole
Yeah,
my thunder.
back and minimize it, sell it out. There's so many different investment opportunities in this, but
Hmm.
just thinking for your regular home buyer where they just want to buy a house and they can't afford like an $800,000 house in this neighborhood or 700, and they just want to get into the market. Now, this is a perfect size home to start with. And so, this is just for without adding more value. Like, okay, let's start with that. So I'm going to show you the numbers that we walk through.
Yeah.
And so this is what I know it's just these are quick numbers. Quick numbers. Um, so we priced it out for, this is actually retail, so this is not like wholesale prices for a general contractor to come in to do this. Uh,
Okay.
he priced at $6 per square foot, and this 890, and that's just the bottom floor. We priced at the top, the attic already separately. So this is just the 890 square feet and $6 per square foot for LVP flooring, and that comes out to about 5,000.
Okay.
And then paint throughout. We're talking about paint throughout the house. Also, we're talking about trim package. So trim and your flat paint for ceiling and walls.
Hmm.
1,000. This is a brand new appliance package. This also includes your washer dryer, your refrigerator, stove. What else? Dishwasher right
Yep.
here. 1,000. And then we have your trim package that I said 3,500. That's throughout the entire house, all brand new trim to
Okay.
it. And then he priced out 12 to 13. I said 12. I'm even thinking 10. This bathroom is small. Like, for you to spend $12,000 on this bathroom, you're gonna have like a really, really fancy bathroom in this house.
Right.
So, but I'm just gonna go with it, 12,000. And then we priced out 15 for the cabinets and countertops. And this is quartz countertops, brand new shaker cabinets. We're talking 15K. I just went to 15K. And then to finish out the attic, really, which is painting it, carpet, flooring, whatever, just to finish out that attic is 3K. And then we're gonna say 2,500 for light fixtures, plumbing fixtures, switches throughout. And then for a grand total of about 53, let's just round it up to $54,000
Yeah.
to put into this house.
Now, what did you say that ARV was again?
575.
Oh my God. And when you sold it for 415?
Yes.
Wow. That's 100K in equity right there.
Yes. And this means, right, so yeah, the seller would close in 7 days, but considering the buyer, a buyer who has a rehab loan, has all of their ducks in a row,
Yep.
they could come in and say, well, we'll pay 425
Mm-hmm.
for it.
Yep.
10K is a lot for a seller. He's willing to wait. Let's see, how long, let's start with you. So what would it look like on your end to get somebody to be able to purchase a package like this?
Yeah. So, I mean, the good news is the loans we're talking about with a renovation loan. I mean, you're really doing an FHA 203K or a conventional, either a home style or choice rehab loan. And those are all, you know, government backed, federal backed programs, whether it's FHA or conventional. So these are not hard money loans. I think that's like the number one thing everyone thinks of. Like if they're going to buy a property and they're gonna, have to come in and do all this work, they think, oh my gosh, I'm having to put 20% down. I'm paying all this money in points and fees and these crazy percentage rates. So if you're a buyer looking at that property and looking at the setup and you've already been pre-approved with your lender for, what do we say? So 415, 425, add 50 grand, so you're talking about 475,000, maybe 490, 500-ish, right? Something like that. So yeah.
Go to 500.
Yeah. So if
Yeah.
you're a buyer and you're pre-approved shopping with your agent right now with an FHA or conventional loan and you've got 3 or 5% down or 3.5 down and you're pre-approved at 500, this is the type of setup where you could literally walk right in and be pre-approved for one of these renovation loans because the guidelines are the same. So whether I've got a client pre-approved for a $500,000 turnkey purchase in like your neighborhood that's ready to go, or I have them do a renovation loan, there's no added qualifying standards for these type of loans. Like you don't have to be a professional investor with this huge background in doing these types of things. They just have to meet the standard criteria of, credit documentation, income documentation, debt to income, all that stuff, right? And again, with that setup, I mean, it's wild to say, but someone could have bought that property, done all that work that you're talking about, and finance all that in as a primary residence with possibly as little as 3% down. That's crazy.
Yeah.
It's just
Is that
wild to think about.
3% of the 500K, like the total
Yeah,
acquisition?
so if you add the two together, so let's say in a hypothetical situation, the buyer came in and offered 425, right? And then they had 60 grand worth of work to do, so you have the two together. So
Yeah.
425, 60 grand, you're at 485 total.
Mhm.
They could come in with a conventional renovation loan and do 3% down and you do 3% on the total. So what's that number?
15K.
There you go. So, with that amount of a down payment, we can get the client the money
Wow.
to buy the house, pay the seller out, and then all that money that was bidded out for the work, once the house is closed and the seller's out of the way and they get keys in hand and take possession, that money that you showed on that other Excel file, that money's held in a separate renovation account by Evergreen Home Loans. And as the client goes through the process and has their general contractor completing the work, they just shoot us a phone call and they're like, hey, I got that, all the flooring's done in the house. I've got the kitchen done. I need to be paid out on these 3 items. We'll come out, we'll inspect it, and we'll pay them the cash.
Mhm.
So what we're not going to do is close the loan and then just cut them a check for 55 grand and say, good luck, but the account's managed by us and we'll work directly with their contractor as they go through and complete it. But again, you're talking about someone that literally just bought a house off the market at a steal of a price, right? They're maybe all in for 485 to 500. The house is worth 575. So they possibly just walked into 75 grand of equity and they did all that with as little as 3% down with a conventional product. I think if they go FHA, it's 3.5%. But that's a heck of an opportunity, Randy. Like it's wild to talk about. And the other thing I've actually had deals before in the past where they've been under contract on a regular purchase and maybe things started falling apart. We actually had to change it to a renovation loan just to get the deal closed, we had to pack in some work to be done. The rates in most cases are almost identical. There's no, it's not like they go from a standard purchase having a rate here and then they do a renovation loan and it's higher. I mean, back in the COVID days, I did a renovation loan for a client with a 2.99 interest rate, getting one done for somebody. So,
Wow, my God.
right. Yeah, that was COVID timelines, but yeah, but it's good to, it's really cool to know that they could, if they already are approved with their lender and they've got these terms on just going and doing a standard purchase and they switch over to a renovation loan, the terms are pretty close to being about identical. Like with our conventional program in particular, I want to say the only added thing that we have is like a $1,500 fee that we add for like the post-closing process of going out and doing the inspections and paying draw requests and all that type of stuff. And it's pretty remarkable that that's all there is for a fee for someone to potentially walk into $75,000 of equity.
Exactly. Exactly. This is great. So then let me just reiterate what you said, or the process. The
Yeah.
process would be for the buyer to come in and get pre-approved with you,
Yep.
just as a FHA conventional conforming loan.
Yep.
And then what would happen is we'd probably try to look at everything, and then they'd find an opportunity like this.
Yep.
But because they're approved for say 500K,
Mm-hmm.
we would go in and offer like 425, 430. And then they'd have that difference to be able to put into the renovations of the house.
100% right. Yeah, you'd basically look at that total price as their total acquisition budget. It's kind of how I refer to it. So you're exactly right. So if I had them approved for 500, whatever they can acquire the house for, the gap between that basically becomes their budget to rehab the house with. And you made a great comment. So you said, yeah, a cash investor came in and paid 415 for it, closed in 7 days. I've had multiple transactions we've closed over the years where my buyers have beat out cash investors and won because of exactly what you just said. If a seller is not in a rush to take cash and run and they'll give us 30 or 45 days to close a loan, your sellers could actually walk away with another $20,000-$25,000. And so you as an agent, you're actually helping your client make more money by selling to the right person and just giving them the time to put it together and close. And even if they paid $30,000 more than an investor, they still are walking into a massive pile of cash because they don't have to deal with all the resale costs or the hard money costs that an investor does. So they're still making out like bandits in that. But yeah, you get them approved, they write the offer. And then really the only other difference as far as the closing process goes is we have to get the written bids. That's the number one thing that is the kind of the time suck with these deals is once they get under contract, they just have to initiate contact with a contractor and get a written bid. I love what you did because you'd kind of already done some of that homework for them. So someone could almost step in, review the numbers you've already done. And if they want to hire that contractor, it's literally off to the races. And the second I've got a contractor identified and a bid in hand, we're moving to ordering an appraisal, and the closing process follows the same timeline of any transaction you've ever closed in your life. So, I mean, we can basically fund that within like 2 weeks once we have that initial information to order an appraisal.
Nice. And then once it closes up, your buyer's agent, your listing agent, they all get paid. It's closed. Now it's pretty much Evergreen Home Loans would take on the process.
Yes. That's the number one thing that's a common misconception with usually agents is the way they understand it is all the work is going to be done or have to get completed until it's actually closed. And it's like, oh man, it's going to take forever. Or they think that they're like somehow entrenched in the process of all the work that's got to get done. And that's all lined up and the buyers selected who they're going to work with and they're off to the races and you're off working with your next client.
Well, that's why people like when we're talking about like buyer agent commissions now, like this is how we bring value to our clients. $75,000 worth of equity, and really you're not actually doing much work once you close. You definitely want to take care of your client after you close and make sure that they move into their house just because that's what you do. That's what we do. But for the most part, you guys are taking it on.
Yeah, when you have a seasoned agent that's experienced in flip, like exactly what you guys do, you and your husband. I mean, you guys are taking on properties and doing this yourself, so you already have an eye for a lot of that. So what a massive value proposition, work with someone like yourself in helping clients identify these type of properties and understand, like, through the eyes of an investor. Someone had made a great comment the other day that I'd heard that said, like, let's say hypothetically someone had 500 grand cash of their own money and saw this opportunity and just jumped on it. They wanted to pay. Well, when you're by yourself with your own cash, it's just you and your own knowledge. When you're involving other professionals and maybe you're borrowing money from a bank, you kind of have a team of other additional eyes that are looking at it and giving you insight into the overall project that you're taking on, and maybe asking questions that you normally wouldn't have asked. And so, if they've got a team of professionals that are coming in and helping them, they've got the hired services of you and your husband to look over the property and say, hey, I know this looks rough, but let's look at the big picture, and then just get that lined up and then cut through the smoke and see the real opportunity that's there.
Yeah, let me actually show you, since I have you here. I just want to show you the actual ARV property. I'm like, this is, and I'm not just pulling 575 out of my butt, it's really, there really is a property that it.
Well, while you're doing that, I mean, I'll give you a deal that we did in Roy a couple of years ago. Beautiful property that was like a daylight rambler. That was kind of like I don't want to say a half completed construction project, but someone had bought the house and started doing some renovations and then just gave up. And the client basically came in and bought the house at a fire sale price. They were able to finance in the remaining work that needed to be done on the property. And on that deal, I'm not kidding, the difference in what they paid for the property and their renovation budget and what the appraisal came in at, they were 115 grand.
Oh my gosh.
From day one, from day closing, six
Oh.
figures in equity. It was the craziest thing I'd seen. And I mean, that's for sure. To this day, that was a couple of years ago. That's the highest I've seen, but not uncommon. I mean, we've seen tens of thousands of dollars in equity routinely on these types of things.
And it's life-changing money, like the work that you put into it in the beginning, the waiting, the quote unquote stress of getting the house renovated for you to live in.
Mm-hmm.
When you go to sell it 5, 7, 10, 20 years from now, it's going to be totally worth it. Even at that point, you can sell it in a couple of years and be able to have some equity to go put into a bigger house or to hold and buy another house.
Well, and it's solutions too. I mean, I guess you can back me up on this or correct me if I'm wrong, but I saw a stat the other day that I want to say was close to over half of all the active listings on the MLS right now. Like, the average age of the sellers is like over 55. Like, it's a
Yeah.
very, very high amount of sellers are elderly sellers that have been in their homes for 30 plus years possibly, and are exactly what you were just showing. They've taken great care of the house, but the house is just either it's extremely dated, or maybe there's some things that have to get updated and get done. And so in a market where there's just not a lot of inventory, and the inventory that is available is going to fetch an absolute premium, this really, Randy, could be the silver bullet for your first time home buyers that are out there and people trying to get into the market. Is we're revitalizing neighborhoods, and we're taking these properties that would just be sold off to, you name it, investor, flip it and sell it and, take a rental out of it. And we can actually make this a legit option for first time home buyers. That's what I love about the program. I mean, you're not only serving a underserved area of first time home buyers that are really having a hard time to get in at a decent price point, but you're also revitalizing neighborhoods and providing the funding to do it. I mean, what more can you ask for? That's fantastic.
Yes, yes, you are speaking my language. And I think this is a solution to the issues that we're having around and about affordability. So this is great. I want to share with you that this comp, this is the comp. It's actually 100 square feet smaller at 575. And you're looking at, we can do the porch, add another
Oh yeah, look at that.
porch if you want the porch, but there you go. This is what we've priced it for. Stainless steel.
Ooh, look at that kitchen.
Yeah, it's so cute. And that is a $15,000 kitchen. Like, we're gonna do that. It's a small kitchen, so you don't need to put so much money into it. With, like, we priced in the new finishes, the new light fixtures, plumbing fixtures, the flooring, same flooring.
Oh, I love that. Love that decor.
Yes, the staging is always nice. Washer dryer, we priced that in. So, I mean, people can walk into, like, you're not gonna live in a construction zone, you know?
Yeah.
And it would be a great agent to help you plan out the whole process. You don't need to live in it. You're gonna move into it within a month or two. This project for us is a month project. We can get this done in a month.
Well, yeah, like you said, there's no foundation, there's no roofing. You're not ripping down drywall and redoing the entire electrical system. And that's pretty
Yep.
straightforward project.
Go. So yeah.
Well, one other thing I would say that is a heck of an opportunity to look at is you brought this up earlier in the Zoom call. You mentioned the DADU option,
Mm-hmm.
right? You said on this lot, it's already, I mean, and technically speaking, I want to say in Washington State, they're moving to nearly all properties or should be able to put a DADU on it or close to. It's a lot. It's opening up quite a bit. But you could use like hypothetically, take your $60,000 budget to
Yep.
freshen up the main house. And then let's say you wanted to finance in the build of a $200,000 ADU in the backyard, you can actually use the exact loan that I'm talking about to do that.
Oh, you can.
You
No
could. I'm
way.
not kidding. Yeah. So again, thinking of what's really popular right now, you have multi-generational housing of, kids that are wanting to buy a house and they want to move mom and dad closer to them from California or whatever the setup is. Yeah, look at that. I mean, look at all that space back there. So you could technically take this loan and buy the property, get your 60 grand to renovate the house, get you 200 grand to actually build the DADU in the backyard, and potentially do all that with the same down payment I talked about earlier, with as little as like 3% down or 5% down with the conventional loan.
Okay, pause. So let me ask you this.
Yeah.
Pretend the house is done. It's livable, it's turnkey. We can update the house as we go, and we can live in it. We're good. We can move into it. And the house is sold at, let's just say 500K.
Yeah.
But we're qualified for 750.
Yeah.
Could they use that rehab loan to build the dadu in the back?
Yeah. It's just the only thing you can't do is I want to say I'm almost positive I'm accurate on this, but I believe FHA guidelines haven't been updated to build detached units yet. I want to say everything FHA allows is more either an attached, like an accessory dwelling unit that might be an addition to, or all the internal renovations. But the conventional loans, you can do that all day long. So you can do detached structures like garages with living spaces above them, or the DADU, and you could do all that with as little as 5% down. The kicker is always, will it appraise? So if you had this unit that you're looking at right here, and then you're adding an 800 or 900 square foot DADU in the backyard, and you're financing, so what's that number? 680,000, $200,000 DADU, or 700,000, let's call it. So you got a $500,000 in on the house, and you got 200 grand over here. Will it appraise for 700 or more? If the answer is yes, all day long. You could literally package that whole thing up, do 5% down, and do all that with a renovation loan, or 3% down if they qualify for the 3% down option.
Oh, wow. That's new to me.
Isn't that wild?
Yeah, that is wild.
It's a sweet setup, and there's a lot of great options with that, and like understanding where you can go with that. I mean, for one, with more and more people doing multi-generational housing, everyone's looking for that, and they're just not out there everywhere. But knowing you could do that makes your listing that much more powerful, right? And you kind of can get the numbers together for somebody. But I mean, we have done that so far this year, and we've done it in prior years. You can totally do it.
Sweet. This is great. Well, Devin, I learned a lot. I learned something new, that we could do the dadus back there and use the rehab loans. And the other question that I have for you
Yeah.
is how ugly does the house have to be for you to be able to use a rehab loan?
Oh, I love that question. It doesn't. I mean, that's the other thing too, is it doesn't have to be a distressed property. It's just, the hard part is when I have clients that are really excited about this, if the house is fully financeable. So take your listing, right? It could only be sold cash. could only be sold as a renovation loan if the house could take FHA, VA, conventional financing. I mean, the amount of offers you would have had on that, pretty wild, you know, and every single one of those can close in under 30 days. So coming in to write an offer on a home that gets all other financing types and saying, you know, give me 37 to 45 days to do a renovation loan, you can imagine how hard it'll be to get that offer accepted in a competitive environment, right?
Yeah.
So, but you don't have to have the house falling apart. I mean, the house could literally just have orange, ugly shag carpet and paneling all over the interior walls, and you just want to overhaul the house. You could totally do that. It's just, can you get your offer accepted? You know, I guess
Yeah.
the key part.
And that's if you're only shopping on the market,
Yes.
you know, you have an agent who has off-market properties.
Ooh, I like where you're going there.
Yeah, you have to compete. And this is where, I think this is also a way to be able to bridge the gap between the sellers and the buyers so that
Yeah.
they're handing it over to um, directly to the next owners. So,
No, and that's a good way to think about it. And that's a great point. I'll be honest, I forgot about that piece. That yes, you are right. There are often times where there's off-market setups that we're doing this. And I guess we've done that before where we have, you know, maybe someone's passed away and they left the home to their kids, and you got 3 kids and one of them wants to buy it. And again, same idea, you know, they're buying the home, but it's wildly outdated. And they're like, I would never live there, you know?
I might have somebody for you.
Yeah, and same idea. You know, you could package that up so that one of the heirs can buy the home with a renovation loan and do all of it and fix it all up and just do all that at the same time. So that off-market setup that you're talking about, we can do all that with those loans. But yeah, it's a great setup. I mean, they're phenomenal loans. And timeline wise, again, I think I've heard people throw out, oh, those take 60 to 90 days. No, you know, again, it's how quickly can you get me the contractor and the bid, and then add about 3 weeks, we'll have it done. You know, so that's about, I would say usually 37, 45 days. I've never had one run any longer than that.
And that's closing, not necessarily
Closing
renovation.
time, yeah, that's closing time from the day the offer's made to the day we're closing. And I've had some of them close in under 30 that are like pretty much like a slam dunk. Like literally, this exact house, like if you're a savvy listing agent and you're packaging this up and you've already got a contractor that's put stuff together and they've already put everything together and you're basically just turning it over on a silver platter, and the buyer goes, I love that, and sure, I'll work with those. I mean, we could close that in 30 days because again, there's no delay. Like we're off and running before I even have the contract in hand. You know what I mean? So I could order an appraisal the minute I get the contract in, and we could have that funded in under 30 days. It's just that it's that bid process. So if a good agent that maybe sets their listing up that way and kind of sells that vision, you know, you sell Maui, not the plane ride there.
Yeah.
What an opportunity, you know, and we can get those done quickly.
Okay, well, I have one that's coming up and we can talk about that when that comes.
I love
But
it.
so I just want to, so you're telling me that if there were people out there who wanted to buy a house from their parents that needed a lot or a little bit of work, that they can just go directly to you and you can help them with the financing on that to get the renovation, to get the acquisition cost, and then also the renovations costs all tied up together into one
Yeah,
loan.
100%. And in some cases, like if the parents are alive still and they're selling the house and they want to sell it through, are you familiar with what a gift of equity is?
No, go for it.
Just that, I mean, in short, just think of it as, you know, mom and dad want to sell the house is worth 6, but they
Mm-hmm,
don't want 6. They're okay with selling it to them for 4 or 5. The difference is
mm-hmm.
potentially equity. So on paper, they can sell their house to their kids and gift them the gap or the equity as a down payment. So I've packaged deals like this up before in the past where we're transferring over a home, the down payments being provided through the equity, enough equities being provided that they don't even have MI because they're almost coming to 20% down on paper, right? But they're not actually coming out of pocket anything. So it's a gift of equity to get the thing done, and we're packaging in the purchase of the property and the renovation. So they're taking over a turnkey project with all the money to do all the renovations, and almost no down payment is even required from the buyer. And they could finance in their closing costs through the offer. I mean, so you could literally just package this whole thing up with a swipe of a pen and make this very affordable for everybody.
Oh, perfect. Yeah, I think that's gonna happen a lot more.
Right? Especially with a limited amount of inventory that's out there. You can't just go walk out tomorrow and find, thousands of homes to go look at. Gotta get creative in this market.
You really do. And for you to be able to hand over some, wealth to your children. Yeah, like I said, I do have somebody that I will be sending to you. I'm going to be following up with him next week. He wants to sell his house to his son in exact situation that you're talking about. So I think this would be perfect.
Well, thank you again for inviting me out. I just want to say I appreciate all you do. I follow you on Facebook and what you're up to out there. I love what you do, and you're just kicking butt and taking names. So, fantastic agent, fantastic person. So I appreciate you, Randy.
Thanks, Devin. I appreciate you too.